Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be asking a question which is on everybody's mind. With so much going on in the macro situation, as well as on the geopolitical stage, the question everybody's asking is, have we come to the end of the Bitcoin bull market? We had a look at some insights in the last week's video on Monday, and we're going to continue that theme, and I'll give you my conclusion at the end of this video. So if that sounds interesting, then you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. There are so many pros and cons giving you different ideas of where we are on the divide of whether we're still in a bull market or we've come to the end of that bull market. And it's very difficult in a video to provide an exhaustive list. So I'll have a look at a few things to give you some of the pros and some of the cons, and then everybody can make up their own mind exactly where you want to fit in. And at the end of the video, I'll give you my conclusion. So we'll begin with the 4-year cycle, which is this default chart that we've got here. And what we've had in the past is that we've had cycle 1 here repeat more or less very similarly in cycle 2, and the third cycle more or less repeated what's happened in the first and the second cycles. So from a point of view of extrapolation, you would expect that this cycle here, the fourth cycle, would have some resemblance, and it does have quite a lot of resemblance, but there are a lot of developments going on at this stage here have not occurred in the first 3 cycles. And it's really that I wanted to look at, because what's happening here currently, how the markets are behaving and what the macro situation is very different to what we faced in the first 3 cycles. And that may well determine whether we have actually topped out or not. And everybody can come to their own conclusion on this. And so far, what we've got is that we're on this journey from the bottom of the bear market, which is over here at the end of 2022. So our journey was from here to the end of the bull market as we expected it to be based on what had happened in the first 3 cycles here. And that was going to come to the conclusion at the end of 2025. And we're about to start April. So we have 9 months ahead. And really what we want to see is whether we're going to continue the actual consolidation here, sideways and down, to go further down, or are we going to actually maintain this journey up to here and come to the normal conclusions that we've done in the past 3 cycles. So let's have a look at some of the pros and cons. And please remember, I can't provide an exhaustive list. We can just have a look at some of the main things, and they should be enough to give people some sort of an idea as to the direction of travel for Bitcoin and the rest of the markets. All we can say at the moment is that this 4-year cycle continues to be quite difficult to read, as it has been for quite a while, because there are so many things that have occurred which have not followed the same patterns as in the first, second and the third cycles. And if you've been watching my videos, you know that I actually go through many of the patterns from the first cycle and try to fit them into the second cycle and the third cycle, and how they all then should play out in the 4th cycle, the current cycle. And many times that's not happened. So we know from just doing that this cycle seems to have been playing out in a very different way to previously. And now currently we're coming across so many things that are happening which are raising many questions which are not fitting into the 4-year cycle narrative once more. So we're going to have a look at the SPX first. So what we've got with the SPX here on the daily time frame is that we've had a very good run from the bottom of the bear market here at the end of 2022. And if we draw a line from here to where we are currently, and on the whole it's been following this particular support line, although we fell out of it there, but we are coming to this support at this moment. So what we really need to do is to actually hold this support. But judging by what I'm seeing here on the monthly, the weekly and the daily time frames, the candlestick patterns, the price action here gives me cause for concern that we're going to break down from here to lower levels. So let's make head or tail about what's happening currently here. And one of the interesting things we should note here is that since the end of 2022, we have made a series of higher lows all along this trajectory of the last 2.5 years. So we can see that we're making the higher lows along, and now for the first time we're making a lower low. And we've had a severe rundown from this level here at just over 6,000. And are we in some sort of an ABC correction to further lower levels here? I'm going to start off on the monthly time frame with the SPX, and what we can see quite clearly here is that we see an evening star pattern. And the evening star pattern at the top of a trend is where you get a green candle at the top, and then that's followed by an indecision candle which tells you that the momentum to the upside has come to the end. And then that's followed by a strong red Marubozu candle, which is usually an outside bar, bearish engulfing candle. And this is exactly what we're getting currently. We've still got tomorrow to go, but at the moment it looks like quite a strong call that an evening star pattern, which is going to come to the conclusion with the end of this candle tomorrow. And what that really means is that this is a continuation pattern to the downside for at least one more month, if not longer. So what I see here is that with this particular candle is for lower prices. So that support line that I just drew, if we draw it here, this support line looks to me in danger of falling out. But not only that, if you look on the RSI here, a lot of people miss the fact that what we did here was we went to a higher high, but we actually made a lower high on the RSI. So what we've got is a bearish divergence, which seems to be playing out, which gives it more pressure to the downside. And if we look on the weekly time frame, once again, bearish pressure seems to be bearing down on the SPX. Now, one thing a lot of people noticed was that if you look back here, then what you see is quite clear upturns, higher highs along the way. But recently, what we got was a rounded top, i.e. a double top here, which once again gives us the impression that the momentum to the upside seems to have come to an end at this stage of the bull market. So now with hindsight, with the way this is now playing out, as I've shown you on the monthly time frame, but also now on the weekly time frame, if we look closer here, if we zoom in, we did come to an end of this momentum here with this hammer candle. So this gave us a little bit of hope that we may well have a run up. But what we got last week with this closing candle was another outside bar, bearish engulfing candle, which will push the pressure back to the downside one more time. This is really not looking good at all here. Of course, we can always go like this. Everything is possible, everything is on the table. And always remember, if you've been watching my programs, that everything is to do with probabilities. There are no certainties, there are no guarantees. We're always going to be playing with the probabilities. And the probability here with this type of setup is that there is a further pressure to the downside. So in the last few videos, I've been relaying some of that sentiment where the markets are not really behaving as you would expect in the final phase of a bull market. And as many people have alluded that this could well be where we actually have a big bounce, and that is obviously possible. This is a very difficult environment we're in at the moment here, because if you look back here, this was also a very difficult environment, but we got an explosive move to the upside here. And that could quite easily happen. But this setup, to me, looks much more bearish than what it's done previously here. And if we go down here and have a look at the RSI, obviously we had a bearish divergence here while this market was making higher highs and the RSI was making lower highs. We still seem to be playing out that divergence, and we still may have a little bit more to go down here. We haven't quite reached the bottom of 30 yet. So this may have quite a few more days, if not a lot longer, to go down, because once it gets below the 30, it can stay there for quite a while, just like it can stay at the top here for quite a while. So there you have it with the SPX. It's not having a good look at the moment. And if we move on to the dollar index, on the monthly time frame, this is also showing the similar pattern, whereas you wouldn't be expecting that. You would be expecting the dollar to be going to the higher side here. And what we do get from time to time is where the dollar is actually correlating with the wider markets, whereas we know that there is an inverse relationship that is normally playing out. So on the monthly time frame, it looks like there is weakness in the dollar. And even on the weekly time frame, what we got was a loss of momentum here with this consolidation. But what we got at the end of last week was this shooting star candle here, which is going to give you pressure to the downside. So even on the weekly time frame, the dollar looks a little bit weak. And on the daily time frame, once again here, we got a tweezer top, which is a bearish setup for the market to come back down. So once again, even the dollar looks quite weak going forward. Okay, moving on to Bitcoin and the monthly time frame. Now with hindsight, how this has now developed over the last few months, what we see firstly here is that there is a bearish divergence with the RSI making a lower high and the price here making a higher high. We also have a shooting star pattern, which is usually found at the top of the trend. And if you watched last week's video, we were talking about topping out patterns where there's an outside bar, bearish engulfing candle. And this is what we've got from last month, which is February. And now currently we're seeing another bearish candle, which is another shooting star, very similar to this one here. But this is more at the bottom of a trend, but it's still a rejection of higher prices here. So this is developing into quite a bearish pattern now on the monthly time frame, which gives the impression this is going to go further lower. And if we move on to the weekly time frame, we have a critical candle, which is this hammer candle. This is a bullish hammer candle, which we found at the bottom of this trend. And as long as we don't close below this, there is still hope that we can still go much higher. So the weekly is really clinging on to some hope here. And the question is this little rally that we got up to 88,000 enough to have negated this candle? So only time will tell, but it looks to me here that last week's candle, which looks like a tweezer top at the top here, and an outside bar, bearish engulfing candle there. If we extrapolate that information, this looks like it's going to come back much lower here. So that's the overall on-balance view when you look at how this is set up now. And if we have a look at the RSI down here, not that it has to go down to the 30, but there is still some room to go to the downside on the weekly time frame. So we may well have a few weeks where we go further down. And just moving on to the daily time frame, if we do a Fibonacci retracement from the previous low to the recent rally that we had up to 88,000, what we're doing is coming to a critical level at the 61.8 Fibonacci level. So normally, in normal bullish conditions, you would find some support there and have a bounce up. So we'll just have to wait until that happens. At the moment, the price is at 81,600. So this may still have a little bit more to go before it has a decision to make at the 61.8. But if we lose this level here at 76,000, which is the lowest it came to recently, then we can have a look at the levels which are lower than the 76,000. The obvious level, should we break the 76,000, is going to be where we consolidated at the top here when we made this big move up to the 73,800. So this is the next level that you would expect. Anywhere around the 73,000 is where you would expect quite a lot of support here, because this was an 8-month support at this point here. So what we've now got is that the previous resistance should turn into a new support here. And this is where it's going to get critical, because should we break this level, that may well be the final straw where people can say that we've now entered into a bear market. It's very difficult to call a bear market here. It's usually with hindsight, once we get some development of what's going on with the price action, that we can look back and give confirmations that yes, this is now moving more into a bear market. It hasn't really given us that confirmation yet. That confirmation will come when we actually move below here. But the level to look out for next after, if we do break this 73,000, would be to take the Fibonacci level from this level here to the top here at 109,000. And if we just move this to the left here to give us much more clarity, you can see that the 61.8, which is the level that usually Bitcoin comes back down to or goes up to, is between 64 and 66,000. So let's call that 65,000. So this is the level where this has a high probability should we break the 73,000. And that would make sense, because this is where there's been a lot of support here, resistance around that level, and quite a lot of support and resistance here as well. So that would make sense around about the 65,000. And the next level would be the 78.6 at 58,000. Once again, a lot of support all along here. So those are the next two levels. Should we break the 73, then you get the 65, and then you have 58,000. And of course, this one here, at the bottom of this hammer candle, is going to be at 49,000, where it came and found resistance here and support at this point. Now, something that I really want to bring your attention to, which is going to be the monthly candle, which is going to be closing tonight and will give us a lot of information as to where this Bitcoin price is heading. This is the 8 exponential moving average on the monthly time frame. And if you've been watching my videos, you'll know that historically, this has been one of the first signs of a confirmation of a bear market. This was the first cycle. Once we'd broken below the 8 EMA, that was the start of the bear market. In the second cycle, exactly the same. When we broke through the 8 EMA, that was the start of the bear market. And in the last cycle, where we had the double top, it was after the second top. Once we'd broken below the 8 EMA, that was the confirmation for the start of the bear market. So this is a major signal which may well trigger off tonight when the market closes for the monthly candle. So you can see at the current price of 81,900 is finding support right on that line. So should we close below the 8 EMA, that is a very powerful signal that we may well be in a bear market down here. Okay, moving on to the 60-day cycle. We started our cycle here on this candle, and we got our normal rally that you would have expected at the beginning. However, this was the Trump pump that we got, and then it dumped all the way down to these levels to retest that level at the bottom. And since then, we still had a rally up to this trend line that I drew in the last week's video, that this is going to be a critical level and that we shouldn't really get rejected here. And if we do, then we really need to hold this 84,000, and we haven't done that. We've fallen below that now. And going into this mid-cycle of the current 60-day cycle, we would have expected a lot more of a rally and to have broken above this trend line. We were coming up to this for the second, third, fourth, and now the fifth time. So this would have been an appropriate time to break through into the mid-cycle before you get a decline of the mid-cycle. But instead we've got this decline into this, lower than the 84. And what we really need to do at this point is make some sort of a turnaround here. But as I've shown you with the wider markets, overwhelming pressure is to the downside. And I think Bitcoin will more than likely, on a higher probability, fall into the trap of what's happening in the wider markets and continue on the downside. But let's have a look what happens. Only time will tell, but this is how I'm seeing it at the moment, with a lot of bearish pressure building up in the market. And what we should really see normally in a bull market or a final phase of the bull market is that we made a left translated cycle here, and we would have expected in a bull market, especially in a final phase, to have a right translated cycle where we went higher than from the midpoint. So we really need to get above this point here at 88,000 for a right translated cycle here and the continuation of a bull market. In all probability, it looks unlikely for that to happen. But as we know with Bitcoin, anything can happen at any time. So we should always be open to that. So as you can see, the charts look technically damaged, and we just have to acknowledge that this is what's happening, and we have to respect the market as we find it and not how we would wish it to be. So to me, Bitcoin is becoming a major concern in the way it's behaving out of character with what we would expect at this stage of the 60-day cycle as well as at this stage of the 4-year cycle. And if we look at gold, now this is giving another signal that we may well be on a downturn, because usually when the markets are on a downturn, gold will act as a hedge. And instead of the market coming back down here, what we've done is we've gone further up, making new higher highs, and the RSI seems to be following suit at the moment. So this is not signaling anything good for the markets either at the moment. So what of the actual pros of the market, i.e. what are the signs that the market may well be going up, and these falls that we're getting recently in the last few weeks may well just be a blip? And if we look at the M2 money supply, we can see quite clearly we're seeing still a rising portion here. And what we know is that Bitcoin tends to have a lag, that when the M2 supply is going up, there is some sort of a period of lag. Some say it's a few weeks, some say it's a few months. So whatever it is, the fact that this is going up means that Bitcoin is more likely, based on this particular chart, for it to follow suit, and that we should be seeing a turnaround in the Bitcoin price. And if you look at the articles on the M2 money supply, there is an expectation that the M2 rebound signals big moves ahead. So only time will tell whether this is going to signal a big move. And if we look down here, there is a feeling that the M2 money supply holds the potential to reignite Bitcoin's bullish momentum. And this particular analyst, master of crypto, is saying that often the M2 money supply predicts a significant shift in Bitcoin's price trajectory. And it explains the M2 money supply for what it is, for those people who are not aware of it, and that is that it is a measure of the total money circulating in an economy, including cash, check deposits, savings accounts, and other liquid assets. So it's a key indicator of liquidity, which influences inflation, economic growth, and financial markets, including emerging assets like Bitcoin. And on the lag period, if we look down here, it's giving a couple of choices here. 70-day lag holds Bitcoin's next rally could start around March the 24th, but the alternative scenario is based on a 107-day lag, which will be starting in April 30th. So obviously March the 24th has gone, so the 70-day lag doesn't hold at the moment. But if the 107-day lag holds, then this particular recovery, which may well actually fit into the narrative that we may well get another month of a declining market, both for Bitcoin and the wider markets, and that the real recovery will start at the end of April. So only time will tell, and everybody can make up their own mind But if the money supplies to go by, then we should see some sort of a recovery coming up. And of course, the USA government has been very bullish about Bitcoin in terms of wanting to hold a treasury with Bitcoins in it. And just 3 days ago, as you can see from this article, they moved 97 Bitcoins and 884 Ethereum. So that's $10.23 million worth of Bitcoin into its treasury. So the USA government is still very bullish going forward. And also we know that the SEC has flipped from being anti-crypto to pro-crypto. So that again is a bullish sign. And when we look at the Fed in terms of the interest rates, at the last Federal Reserve meeting, they made the intention to reduce interest rates twice more. We still have 2 lots of interest rates to fall, which would again increase the liquidity into the market. And their intention is to reduce the borrowing cost by 0.5 percentage point by the end of this year. And they're going to do that by 0.25 percentage point in 2 lots. So obviously that would be positive for the market. And the interesting thing here is regarding the quantitative tightening, because the Fed also said that it will slow the ongoing drawdown of its balance sheet known as quantitative tightening starting next month. So from April, the quantitative tightening should be easing going forward, which increases the liquidity into the markets. So once again, this would be pointing to the fact that with more liquidity, Bitcoin may well be turning around sometime in the next 3 or 4 weeks. So I don't want to make it an exhaustive list on either side. The question is, when you're faced with what's going on here, people have decisions to make, and when you balance out all the pros and the cons, then everybody has to make up their own mind. And if you've been following my channel over the last few years, you'll know that up to now, my narrative has always been to follow the 4-year cycle narrative, and that we're still in a bull market. And really, these are the most difficult conditions that I've seen over the last 7 or 8 years, especially with the macro situation and the new administration making erratic decisions, causing a huge amount of uncertainty, where investors really don't know where to go, and anything can come out of the current administration in the USA. So based on the uncertainty, on a balance of probabilities, I really don't want to be calling this a bear market until it starts moving below this level here at 73,000. Or the price falling below the 8 EMA on the monthly time frame, and that would be closing tonight. So we'll know better at that point. At the moment, I would say I'm 50-50. This can really go either way. And I know that's not what people want to hear, but if you've been following my channel, I've been very much a pro Bitcoin in terms of the 4-year cycle. And so this to me was always a trajectory that was in favor of the bulls. But what's happening here has changed that balance of probabilities to a 50-50 here for me. And until it breaks this level here at 73,000, or closing the monthly candle tonight below the 8 EMA, that would really be the threshold where I would be saying that, yes, we may well have topped out at this point. And many people think that we may well be having a big massive move to the upside at this moment, because Bitcoin has actually squeezed out of the sellers here. There's been a lot of sellers who've been shaken out here, and they may well be right. I'm never going to disrespect anybody's opinion, because at the end of the day, nobody knows the future. Nobody has a crystal ball. All we can do is read the charts and then make an unbalanced view of exactly where we think that the trajectory for Bitcoin may well be going. So for me, we're really on a knife edge here. It really is 50-50 where this goes. If push comes to shove, I would say this is going to go at least to the 73,000. And if we have a look at the liquidity heat map, what we have is the leverage players at the 81,100. So this looks with a high probability that we're going to at least visit 81,100, and then you have all these levels down here. So it looks like with a high probability we're going to test the 80,000. So there you have it. I'm aware that a lot of people don't want to listen to that, and that people really want to listen to some positive vibes. I wish I could give you those, but I can only give you a balanced view of where I see where Bitcoin is heading. Also, I just want to make an announcement that from next week, these videos that I do on the Monday will be shifted onto the weekends. It's becoming increasingly difficult for me to do videos on a Monday, so I will try and do them either on a Saturday or Sunday. So look out for the videos from next weekend onwards. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.